Okay, so let me just tell you in short what we are doing today. So we are doing a
Okay.
one-on-one wherein we'll be discussing your problem, like your major problem that you face, which maybe you think is not going away from you or you want a solution for. We'll just discuss all that right now. So
Okay.
let me just get to your first problem. Okay, so can you just discuss it and we'll go ahead.
Yeah. So the main thing is so is it possible for me to show you my screen so that
Yeah. If you can do that.
okay. So the main thing is actually I'm trading using the 1 minute time frame and the so these are the some paper trades I took today. This is actually the real one. This is a paper trade and this is also a paper trade. So
Okay.
basically what happens is like I am unable to find the correct order block.
Okay.
Like I'm not sure whether it is a proper order block or the zone where it will come to the previous zone which I drawn so that it will
Okay.
be a proper trade. So as you can see, this is so in my understanding this will be a liquidity grab, and so here is a small kind of breakout structure. This is what am I understanding. So what I did, I draw a order block, and when the price shows a reversal, I took the entry. Okay. So
Okay.
what my expectation is, it will come here, but unfortunately it's like when high. So this is the major issue I'm like facing.
Okay, let me just ask you one question. The demand zone that you have drawn on the left side below that, when did you mark that? Did you mark
This
that
one,
before? Did you mark that before you marked the OB for your short?
you're asking about this particular one, right?
No, the demand zone down there.
This one.
Yeah. When did you mark that? When the move was made, right?
Yes, exactly.
So then, in the first place, you shouldn't be looking for a short because clearly you have a demand zone there. And what you should instead be looking for is the price to do its work. Wait for the demand zone to come. And as
Okay.
soon as the demand zone comes, you see what happened. You found a move that you actually wanted. I mean, you were anticipating that move all along. Maybe that short was not needed or needed. It's as per your setup. I won't get into that. I'm just trying to tell you
Okay.
is you had a clear bias on the market and you tried taking a counter trade and that clearly did not work out. So I can't see your screen, Arvind.
Yeah, 1 second. Yeah.
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 So what happens because of this is now you took a live trade and you lost the trade, right?
This is the live trade and this is the paper trade, right? Like because I
Yeah.
didn't take a real entry over here.
So all you had
Yeah.
to do here is just wait for your zones, like I always say, just wait for your zones, and instead you would have taken the live trade there. So that's what I
This
try
one.
clearing out. Yeah. So you would have ended up taking that live. You could not take the live trade because you were not psychologically in the market. I mean, after seeing that loss, you were just letting price go and you were just paper trading. But anyway, so your zones are perfect. There's no problem in the zones at all, as far as I can see. What you only need to realize here is that you see your demand zone holding.
Yeah.
Yeah, it's definitely holding. You were correct on your bias.
Yeah.
You were correct on your zone. So then why look for other zones? I
Okay.
mean, zones that are not relevant to you. That zone is again a part of a higher time frame zone. Can you just zoom out 15 seconds, 15 minutes or something?
This is 5 minutes. Yeah, 1 second. 15 minutes. Yeah. I just deal with it. Yeah.
Okay, okay.
Like, do you want me to show the previous one?
No, that's fine. That's fine. That's fine. That's fine. So you were saying you have difficulties marking order blocks. Is that correct?
Yes. Yes, correct.
But honestly, I did not see any difficulty there.
Oh,
Okay.
okay. So whatever I am drawing is like it's kind of good only.
Yeah, it's
That's what you're
right.
saying.
You just have to go with the order flow. So what I mean by that is when you have your demand zone mark, let the price run and do its thing. As long as it's on the higher time frame, it's not showing you a significant shift. you know all your zones are always valid. Of course you have to test and see what your system is telling you, and then based on what rules you have. But these zones are perfectly all right according
Okay.
to me.
Okay.
So, but the only thing is don't overmark. I mean, you're not trading support resistance, so you don't have to make 1,000 lines on your chart. Just one, two, three lines
Mm.
are good enough, and you just see what price does when it comes to those one, two, three zones that you've marked. Chances are that
Mm.
two of them will not
Yeah.
hold, but the one that holds will give you the move that you need.
Yeah. Okay.
I mean, that's what it is. So, anything else you want to ask
Okay.
me regarding this? I mean, if you
Yeah.
want to learn how to draw
So
zones,
we
I
just,
don't think I need to teach you that because you already have the zone. I What I mean is the order block that you've drawn above where you're trying to take a shot from, that's a valid zone if it fits
yeah.
in your setup. But if you don't have a setup or a system as such, then just stick to these zones is what I would say. The bigger areas where you can see a reaction come from. That basically means that there's some orders in those blocks that need mitigation. That's why you can expect a move of them like that. And as far as
Mhm.
the short order block is concerned, I don't see anything relevant happening there. Or maybe if you do and you have a setup for that, then it's clearly your edge. But by the time you find your edge, I think you should just stick to these simple zones and make them your point of interest. You
Oh,
see what the
okay.
price is doing there, and then you can take your entry.
Yeah. And one more thing is like, even so, as you can see, it's a gap up opening over here.
Yeah,
So since and I started watching the market a bit, I think over here because I know I have another work also.
right.
So I started watching over here. But since I couldn't find any entry, I was watching like here. So this is a previous like a 1 day time frame kind of support or resistance kind of.
Yeah,
It
so
acted as a support and a resistance as a.
Nifty just dumped from the daily supply.
Huh. Yeah. So what happens is I was always like, since I missed this like buying opportunity, I thought it will like come down. Like there will be no shorting opportunity. So that bias actually made me to draw this particular block, and I entered here. So as per my trading, like I said, so this is the first tab in the order block, and this would be the second. So normally I like take entry when the second tag happens, and
Hmm.
like what I took as a confirmation is the a bearish candle in the zone.
Correct.
So according to me, this is, yeah. So that's what I'm asking. Like, is the whatever I said currently? So that is a proper way of taking entry, or
So
should I
you
like?
see the zones are correct, and I'm seeing that you already have your rules in place. I mean, you have a few rules in place. Now, what you have to do is just test them every day in market scenario. Don't go behind running a live account or whatever. It depends on you, whatever you want to do. But just test these every day. See how these entries are working for you. Once you have say 50, 100 trades logged in your journal, what you can then
Mhm.
do is see what scenarios are playing out. Now, according to my system, as per my system, I would only look for shots when I would see a breakdown below the demand zone that you have drawn. That's when I know structurally the market is going to shift, and only then I would be valid for looking shorts. But that's my system. You might not be seeing that. You might be seeing something else. So it's not necessarily that you follow the system that I follow. What you can do is
Okay.
just make a few rules. Let's say make 5 rules.
So
You can do that right
yeah.
on
So
trading.
can
You
I?
can,
Yeah. So can you see this line?
yeah,
This one just I drawn.
yeah.
So can I consider this as a breakout structure? Like, even though it's a small one, can I consider?
Okay, so just do one thing. Just take a screenshot of this and log this in your journal. Okay, only this observation. That's what I want you to do. And now just
Okay.
move to a different part of the market. Just scroll through the day and see if you find a similar structure again.
Uh, like the breakout structure, like
Yeah. What do you think is a
where
breakup structure or equal lows or whatever you think they are?
uh, maybe here, like this low was taken out here.
Okay. And what is the difference that you see when the low is broken?
So if this happens, what I will do is like I'll mark this as a zone, but definitely this was taken out here over here, right? Or should I consider this entire candle as a block, or should I draw like this?
So what normally happens is, with the difference between a liquidity grab and a break of structure, is that what I essentially look for when when you like the yellow line that you've drawn on the left side. What I normally look for is a displacement in price, which is a wider concept. But to make it simple and just explain it in a little easier terms, is that on my specific time frame that I'm operating, I look at what the candles are doing. Meaning I don't have volumes running, but I see the volume of the entire candle. And based on the observations that I've made in my system and my rules, if they fit my criteria of a displacement or a break of structure or a liquidity grab, then I treat them like that. Which is why what I want to tell you right now is, you will have to see this structure again and again. I mean, it's all about repeating it
Okay.
over and over again, over and over again. You'll just see this happen many times, and you'll realize, you'll make your own observations. And this is my observation about what you're trying to show me. For me, that wouldn't have been a break of structure. It's just a simple liquidity grab. And we are bullish until we are holding the demand that you have drawn, which we were.
Okay.
So
Okay.
that's,
Okay.
in simple words, that's how if you, I think if you analyze price like that, you just keep talking about it. That's one way that honestly has worked for me. You can try it out for yourself, but you have to make these observations every day, at least until you get
Okay.
your understanding right. Yeah.
Okay. So one more doubt is like, so if this price now break this demand zone and comes down, and if it just goes back over here, and if it gives a confirmation for shorting, I can do that, right? Since
Yeah,
this holds, I should only look for like longs.
exactly. Yeah, that's what you do. I mean, now
Okay.
this is where time frames come into picture. Every time frame is going to show you the same thing. It's just that the higher time frame is going to have a very big influence on the time frame that you're operating on, because it's clear that we are not operating on day time frame every day. I don't think you do that either. So what you need to do is, you need to have your zones marked and you have to be ready. Once it comes to your zone, you shift
Okay.
to the time frame that you operate on. Say it's a 1 minute, 5 minute, whatever time frame. Then you apply the same thing that you applied on the daily chart, but on a 5 minute or your time frame, and then you take a trade. I think that's the key to finding quality trades in any market. So you just have to
Okay.
apply the same thing over and over again. What you just told me about, that if the demand breaks, and if according to my rules it's a shift in structure, I just take that trade, because according to my data, I
Okay.
know I've taken 100 trades like this, and this is how they worked out. So your observations are going
Okay.
to get better over time, and you'll you'll yourself see a difference in that.
Okay.
But
Yeah.
the basic
And
basic idea that you
sometimes.
have is correct.
Okay. Okay. So sometimes I see that, so maybe this will be a correct zone. So sometimes what happens is the price breaks this zone and then come back, like it will be a proper now shorting opportunity, or but since it breaks, I might think that the zone doesn't hold good, so I shouldn't enter into that particular trade. So sometimes that also happens, right? The price breaks the zone and maybe like grab the liquidity and then come back. So
Yeah.
how to identify such kind of trades?
So this is exactly what I use for displacement. What I was talking about earlier. You will have your own understanding of that, and the more situations you see, or the more situations you test in a live market or a back test or whatever you're doing, you will start understanding how price is displaced. I mean, a certain time frame that you're looking at, say a 5 minute, 10 minute, 15 minute, you just have to move into different zones, different time frames. Once you move into different time frames, every time frame is going to show you a different candle story, and you can make those
Yeah.
observations based on that. But in this case, the supply was never going to hold according to me, because there was no change in any structure. So the answer to your question is that, I mean, you'll have to make observations, man. This displacement is something that I haven't touched yet. I mean, in terms of public content, because
Okay.
it's an understanding that I have developed over time. So I basically, I just, this is where I want to keep it. But the moment you
Okay.
start making observations, and everything, you are going to get there for sure, because you already know these things are happening in the market. That means you already have noted them down in your head. Now you just have to make a journal for yourself.
Okay. Fine. So shall I stop sharing the screen and move on?
Yeah, you can stop sharing your screen. I can maybe share my screen if you want, if you have some more questions.
Yes. Yes.
Yeah, let me know when you can see my screen.
Yeah, I can see now.
Yeah. So I think that was basically it to cover. You know how to mark your zones. That I think was your biggest problem, that you messaged me about, that you were worried about
Yeah.
your zones. Entry criteria, I think you have your entry criteria already, and you just need to test it out more. And by more, I mean you have to be like a
Okay.
human bot when you do it. Every time you see your rules met, you just have to execute a trade. You don't move your account, you don't move your risk, you don't do anything. You just take it.
Okay.
Yeah, that
And
actually was a
like
that actually was a pretty good long there.
yes.
Yeah, but you maybe wouldn't have missed that if you hadn't taken this shot.
Because since, like I said, since I missed the long, no, I,
Yeah.
I was biased to take the short entry. I was not looking for longs.
Right. So
That's
what
what
you do
happens.
is, what you normally do is, see, if you have that problem, it does happen in the initial days. It did happen to me as well. So what I would do
Yeah.
is just set an alert. So I know when the
Okay.
price comes back to my demand zone, I'm getting that entry. If since you are trying to get into the groove, and there is a little bit of FOMO that happens when you see that your zones are not hitting, but eventually they hit and then your trade runs. So to avoid all that, you can just put an
Exactly.
alert. You can just put an alert and just chill till then.
Okay. And
I think that,
can you
and
show me some like,
this I think this normally
yeah,
happens.
please.
This is a special characteristic of the Indian markets, that you just have five, six
Okay.
hours to trade. And you think that if you miss a move, you're going to miss the entire week worth of move. That's why the FOMO factor is very high in this market.
Okay. So you won't trade in Indian markets, like,
No, so I trade in the Indian markets. What I normally do is I go to the higher time frame zones, and then I maybe look for my
okay.
distribution or accumulations there. And so that's very rare now. Since I don't get time to trade the Indian markets, I normally just create positions in the Indian market for like swings or something.
Okay.
So this is exactly the zone that I had discussed in one of my posts. So I got a lot of positions here. I mean, this exact area. Had a nice ride up, and then
Okay.
I've just added a few more positions. So let's see.
Okay. So can you show me some liquidity grab examples,
Yeah.
like how to identify? Yeah.
Okay, there. This. See this. Let's just go back. And I mean, I personally wouldn't trade this zone,
Okay.
since there's a lot of structural play happening here. Maybe if it comes back here, I would maybe look for shorts. But let's see now. You're on a This is a 5 minute. Yeah, it's a 5 minute zone. So let's just play it out and see what it does. Okay. So you currently are on a 5 minute zone,
Okay.
and this is the next candle. So do you see this liquidity is being taken? And which zone are you watching? What time frame zone is it? It's a 5 minute zone, right?
Yeah.
So all you have to do is let the candle close. It's as simple as that. Don't operate when the 5 minute candle is still being printed. If you don't understand displacement, or you don't understand bigger concepts, or if you don't have your rule set, just let the candle close. We'll see what happens in the next candle.
Mhm.
There. So how does it even affect you? I mean, it should never really affect you, because you are operating. If I'm on a 1 minute zone, or if I've refined my zone to this particular area, let's say this area, this is a 1 minute zone, just for an example. Here,
Okay.
if you are only operating on this time frame, I mean, without knowing what price is trying to do, then you would have seen this, and you would have been ready for longs from here. I mean, that's the basic understanding
Yes.
what people have, that if this is breaking, or if I see a volume above a certain area, I can go take my longs, and then you get destroyed like this. So you
Correct.
just have to let it close. I mean, you're not going to miss a move for sure. I mean, it's not going to happen. It's going to be very rare. After you have everything set, you're not going to miss a move. You'll be a part of it. If you're scared that your zone is run now and you can't take a trade, just simply put,
Mhm.
you go on a 1 minute and you see, okay, we don't have that data. So if you think that your zone has hit and the trade is running, there's always a way to catch even that. There's a way to catch everything, and it's just that unfortunately, we as traders, when we operate on rules and a system, we only have to look at that one scenario happening over and over again to make money. So
Okay.
you will have to select your own confirmations criteria system, but that's how you. So I hope you understood what I was trying to tell you there, that just
Mhm. Yeah.
just give it time, just give the zone and the candle enough time to close, and you will not be trapped. As simple as that. There we found the
Okay.
perfect example for that. If you're looking at this zone, if this was your POI, if it was even
Mhm.
bigger, I mean, if you go on a bigger time frame, it will be a little bigger. Here, then this would be a zone. So where is the liquidity grab? Now, someone on a 30-minute time frame doesn't even see a liquidity grab.
Okay.
I mean, it just depends. I mean, it actually is a liquidity grab, but you know what I'm trying to tell you. That you just switch
Yeah.
time
Yeah.
frames and
Understood.
the story keeps changing, but you have to understand where you are on the higher time frame. So you can't treat a 5 minute zone like a 1 minute zone and expect it to give you a 50 hour. I mean, that does happen and that will happen. But before that, you'll have to go through a lot of break evens and the smaller ones. So you need to choose your zones. First, choose a time frame that you operate on. And this, what, and the whole part of waiting for a trade, I think Forex plays a very important role in that, since it's always on. I mean, it's on 24/5. So you're never
Mhm.
actually worried about losing an opportunity. So do you trade any other markets
Okay.
apart from the Indian market, or you just trade the Indian market?
Uh, no, I won't trade, but I watch cryptos.
Okay. So you watch both the markets that you watch are volatile. So for a smart money system to be built around that, you'll have to work with volatility. I can tell you that.
Okay.
So you should maybe look into a system that deals with volatility, and you'll not even miss. Let me show you. With those systems, you will not even miss these. I mean, this. You see what happened after yesterday, like a 300-point jump. If you can build a system
Mhm.
around this, I'm sure this is obviously a demand zone, as you know, and this move is coming from a demand zone. So if you had a system built around this, let's just see what we can do with this. 1 second. The red zone. There, that's your area of operation. If you had a system built around it, you make certain rules. Whatever your rules are, you maybe look for Wyckoff or whatever you want, and you can get involved in this. So the kind of markets that you're looking at, I think you need to work on adding areas of volatility in your system. I mean, it could be dependent on stop losses or whatever observations you make. If you think you see liquidity grabs very often in the Indian market, then you can work with bigger stop losses or something like that.
Okay. And okay, like if, how to like operate in this kind of gap up and gap down openings mostly it happens in Indian market, right? So how to deal with that?
Operate or manage. See,
So is,
do
yeah,
you
yeah, go
mean
on
by
please.
managing your trades in this market or
No, like sometimes I'm confused that since it's a gap up opening, the price would come back to fill the void and then it's go back. So I will be looking for shorts till that void is like taken out. So
so?
is there any
So is this what you mean? I mean something like this area.
mm,
You're
yeah,
calling that a void, right?
not exactly. Like the previous day high and the the opening of this today's market.
Okay, so what exactly are you trying to say here? Can you just specify a little bit?
Yeah. So in my understanding, mostly what happens. Give me 1 second.
Yeah.
Yeah. So if there is a gap of opening, so
Hmm.
most of the times there are sayings that the price would come down to take out that void, whatever voids that make. So what happens is like I'll be looking for shorts, even though it is a gap of opening.
Like
So how
this,
to
like
avoid and
today.
know what? Yeah. Yes. Correct.
So then you feel that if the longs are not valid because the price can always come down.
I think so. Like that's what
No,
like I learned from this so many things. Like
no, you mean, see, if this is happening, if we are here on the chart, you are
okay.
scared to take your longs because you think it can come and do this. Is that correct?
Yeah. Exactly. Yeah. Yeah. Correct.
Correct. Now let's
Yeah.
see one.
Correct.
Let's see one thing. So I honestly believe that that sort of thinking is a lot related to the retail methods. So what normally happens
Okay.
is the retail is, you have to understand, no one is creating liquidity. The smart money is not creating liquidity. It's retail that is creating liquidity in the market. So the first thing and the easiest thought that comes to your mind is not going to be the most obvious in trading. So as long as the structure tells you it's not going to shift, why are you looking for your shorts or why are you looking for your longs? If I don't see a decent enough breakdown here, then why will I even look for shorts? So forget void and forget everything. I mean, Indian market is such where you will rarely see pullbacks. I mean, when Nifty starts moving, you will rarely see pullbacks. And those pullbacks are, your
Okay.
zones are just going to be left empty. Now, if I mark this zone and I think this move has come from here, chances are the zone is never going to come back to the zone. And if it never comes back to
Okay.
my zone, I miss my opportunity, and that's bad for me. So
Exactly.
you need to be able to work around with whatever the market is showing you. Just because it's 5% up today does not mean it's going to be 2% down in the day.
Mhm.
So I think just completely eliminate that. So this sort of imbalance will most likely get filled. If the market starts moving, it takes weeks, months for such imbalances to fill, especially in the Indian market,
Okay.
in which rarely pulls back hard. I mean, pulls back to your zones is what I mean, not just a pullback. Regular pullbacks are fine. So if you can make a system around that, then I think you'll be good to go with the Indian market. But
Okay.
all this, I mean, just don't confuse yourself with a lot of terms. That's what I would say. Because if it makes sense to you and it's working for you and it's a part of your rule based system or your logic, then it's working for you.
Okay.
So it, of
And
course, there was not a single breakdown during the day here. Everything held perfectly. So this this wouldn't matter. And what is the worst case that can happen? See, you know all these concepts, you have them in your mind. If this is that entire area, that void area or liquidity area or whatever, and you take a long here, say you take a risk entry, what is the worst that can happen? It'll cut you out. Once it cuts you and the zone becomes invalid, you know you're not trading it anyway. So don't let this scare you to take this.
mhm. Okay.
See, the downside is this, and the upside is, of course, going to be better. I mean, it's not going to be like that every time, but don't let this scare you for this. Just go on whatever bias you have for the day, whatever zones you see, whatever zones you mark, just keep taking them. That's how that's how it works. And if someone
Okay.
else is not trading this
Okay.
void or whatever, just let them not.
Mhm.
Simple. But once you start missing opportunities, if this works out, if this if this works out, you know you're not going to maybe look for a second trade in the day. But
Mhm.
if this works and you were thinking the market was going to fall, it's obvious that you have missed this zone now, and now you look for a FOMO trade here or wherever you want to take a trade. That's how most losses come about.
Okay. Yeah, and like one doubt is like so if I draw a demand like supply zone
Hmm.
and the price comes to the previous demand zone,
Hmm.
so what should I like next look for? If I take a long entry, so the target would be the supply zone, right? So some most of the time the supply zones may fail and it will go up again, so I will be missing that the huge, points I will be getting.
Again, you know what the thing is, I'm actually making a video on this exact thing, that it's a little confusing for people, I've realized, and a lot of people even message me asking me about this. So I actually have a video scheduled for this, and I think after you watch that video, it will
Okay.
be very clear. So it also depends on what the current order flow in the market is. I mean, obviously, of course, if it's a bearish market, you can't expect longs to take all the liquidity and give you all your targets. So it's pretty simple, but also pretty complicated as far as I've understood from what people say. So I'll just break it down very simply in that video, and I think it'll be out maybe tomorrow or day after. So